in a major setback for mutual fund investors. The government may do away with the long-term capital gain tax benefits that a debt fund mutual investor enjoys. According to the proposed amendments in the Finance Bill 2023, investment in mutual fund where not more than 35% is invested in equity shares of Indian companies will now be deemed to be short-term capital gains. Sakshi explains.
It's bad news for investors in debt mutual funds and a few other mutual fund schemes because the tax advantages that they've enjoyed for several years are soon to come to an end. In fact, from the start of the new financial year in April. This was done through an amendment in the finance bill that was passed in Parliament today. And that amendment essentially dealt with mutual fund schemes that have an equity allocation of less than 35%. And that includes all debt mutual fund schemes. They include gold ETFs, as well as fund of funds and foreign-oriented mutual fund schemes. What they say is, or what this amendment says, is that all of the gains that emerge from these schemes will only now be considered short-term capital gains. Earlier, if you held these schemes for more than 3 years, the gains would be considered long-term capital gains, and they would be adjusted for inflation through an indexation benefit before they were taxed at 20%. And so the effective taxation was less than 10% in certain scenarios. So they were highly lucrative. Now the question arises, will people move to fixed deposits? Because at slab rate, it's essentially parity between the tax treatment of the two instruments. That may not be the direct outcome of this, because there are certain advantages to investing in fixed income mutual funds. The most primary being, of course, the flexibility of pulling money out whenever you want it in most cases, and the other being the potential for capital gain and indeed loss. But in the scenario where you have capital gains, if interest rates are at the peak, there is a significant potential for capital gains if you invest in fixed income mutual fund schemes. A few inadvertent consequences of this could be a move to physical assets, because real estate and physical gold still have the indexation benefit on long-term capital gains.